Here are the 5 types of investment. Hello, welcome to my YouTube channel. Pag-usapan natin ngayon ang 5 type of investment at kung bakit mahalaga mag-invest dito. So, alam nyo guys at napakalaga na isipin din natin ang ating future habang tayo ay bata pa. So, mas maganda mag-invest ng early 20s. So, yan. So, dapat natin isipin ang future natin. So, ano ba yung mga magagandang investment? So, maraming alam na siguro ang aking sasabihin na 5 investment na to, pero hindi na nila pinapansin o hindi nila binibigyan ng importansya. Pero ito pala ay napakagandang investment para sa ating future. Kasi habang bata pa tayo, dapat mag-invest na tayo na mag-invest at dapat sa talagang lalago ang ating pera. So, alamin nyo guys, itong 5 types of investment at paano o ano-ano ang mga benefits kung kayo ay mag-invest dito guys. So, watch this guys.
Type of investments. What will make you the most money? Gold. How do you make money from gold? Gold is typically seen as safe investment because it holds its value and isn't supposed to be subject to market fluctuations in the same way stocks are. Therefore, it's less a way of making money and more a case of protecting your money against a financial hit. While there are fluctuations, its main characteristic is that it often doesn't reflect what's going on in the stock market because demand is up as investors move their money away from the stock market towards gold. Real estate. How to make money in real estate. Property value increases and rental income are just 2 ways to profit. Whether you're curious about the investment potential of real estate, you're simply sick of informal shops promising little known ways to profit from your property. It's worth learning for real how real estate creates wealth. Real estate is generally a great investment option. It can generate ongoing passive income and can be a good long-term investment if the value increases over time. You may even use it as a part of your overall strategy to begin building wealth. Mutual funds. Mutual funds. You can invest in mutual funds. A mutual fund is a pool of funds from many investors that are diversified into many different things, including stocks, bonds, and other assets. They're operated by a money manager who invests your money for you and attempt to get good return. A mutual fund is a pool of many investors' money that is invested broadly in several companies. Mutual funds can be actively managed or passively managed. An actively managed fund has a fund manager who picks companies and other instruments in which to put investors' money. Fund managers try to beat the market by choosing investment that will increase in value. Stock market. Invest in the stock market. Shares are considered a growth investment as they can help grow the value of your original investment over the medium to long term. If you own shares, you may also receive income from dividends, which are effectively a portion of a company's profit paid out to its shareholders. Of course, the value of shares may also fall below the price you pay for them. Price can be volatile from day to day, and shares are generally best suited to long-term investors who are comfortable with standing these ups and downs. Also known as equities, shares have historically delivered higher returns than other assets. Shares are considered one of the riskiest types of investment. Shares are considered a growth investment as they can help grow the value of your original investment over the medium to long term. If you own shares, you could also receive income from dividends, which is when a company shares a portion of their profit with investors. Bonds. A bond is a debt instrument representing a loan made by investor to a borrower. A typical bond will involve either a corporation or a government agency, where the borrower will issue a fixed interest rate to the lender in exchange for using their capital. Bonds are commonplace in organizations that use them to finance operations, purchases, or other projects. When you buy a bond, you're essentially lending money to an entity. Generally, this is a business or a government entity. Companies issue corporate bonds, whereas local governments issue municipal bonds. A bond is a loan you make to a company or government. When you purchase a bond, you're allowing the bond issuer to borrow your money and pay you back with interest.